Raghuram Govindarajan is the current and the 23rd Governor of the Reserve Bank of India, having taken the charges of India's central banking institution on 4th September 2013 and succeeding Duravi Subbarao. Rajan was a chief economist advisor
because
to the India's
inevitably
finance ministry
people will come
during
to
the
terms with the
previous year,
fact that central
and the chief
bankers
economist
are
at the
borrowing
International Monetary Fund
insensitive
from
people.
2003 to
So
2007.
that will be the
He is
fault.
on leave of
But
absence
you know,
as a professor of finance at
while
the
it
Graduate
lasts,
Business
let them
School at
talk
the
about it.
University of Chicago.
I bet your wife really likes it.
I don't know whether she likes it or she's worried, but she has me nicely tethered. So
I want to ask you a little bit about the Rajan rally that you've caused. The stock markets are up. The rupee has regained some of the lost ground. How long is this rally going to last?
well, seriously, I mean, what we have been trying to do, both the government and the Reserve Bank, is try to change the perception about India. There was a point at which people thought even the unimaginable, India, a country with $280 billion in reserves, would find it difficult to finance its current account deficit. That was never a possibility, but people weren't willing to go beyond the headlines. And the headlines, I have to say, the newspapers in bad times tend to pick out every bad thing that's happening and focus on it. And that tends to make things even worse. So our attempt was to try and change the dialogue. We do have macroeconomic challenges. We have high inflation. We have a fiscal deficit which is much too large, and we've been bringing it down, but we need to do more. And we had an external deficit. We were financing ourselves from the rest of the world, again, much too large. Now, we have focused on bringing down that borrowing, and I'm happy to report that while the governments and the RBI, the Reserve Bank, says that we'll be borrowing 3.7 percentage points of GDP this year, down from 5 last year, the private analysts think it could be much better than that, much lower. So we're happy with that change.
I think one of the reasons why India has been under pressure, like other emerging economies, is because of the possibility of the Fed reining back its cheap cash. Do you think the Fed is taking enough consideration of the global impact of its actions?
I think that at every international meeting, the Fed has been hearing the concerns of the emerging markets. Now, the Fed's mandate, as many Federal Reserve presidents have said, does not include foreign countries and their growth, except indirectly to the extent it feeds back into US growth. But nevertheless, I don't think the Fed would like to see other countries experience serious difficulties. And to that extent, they are mindful. To some extent, you might even think that the shot across the bows that Bernanke fired in May was an attempt to get the markets to prepare for an eventual Fed tapering. And certainly, I think we will be better prepared when that actually happens.
That was